ఓకేనా
Start.
రైట్
Good morning, my dear students. Welcome to online recording classes due to COVID-19. So, in part of your financial accounting subject, the fourth unit going on. So, in fourth unit, the analysis of the financial statements. So, in last session we have completed comparative balance sheet. So, in comparative balance sheet and comparative income statement, how the calculations are there, we have seen. And previous to current year, if any increases or decreases in amount and percentages, we have calculated. So, in same way, the another method is common size statement. Common size statement. So, in common size financial statements analysis, here also same like that, income statement and balance sheet, both are there. So what is the difference between the comparative and common? In comparative statement, compulsory we will take 2 years. Okay, from first year to second year, what are the changes? So the difference between the 2 years is compulsory in comparative statement. But in common size, there is no need of the 2 years. In 1 year, one common figure. Suppose in income statement is there. In income statement, you have to prepare the income statement from sales to last, what we are getting, the net loss or net profit. Then the total expenses here. The cost of goods sold, what is the percentage in sales? The gross profit, what is the percentage in sales? And operating expenses, what is the percentage in sales? And each and every transaction, what items are coming into the income statement, so that each and every item calculate the percentages in sales only. So that is the common figure. We are taking the sales in income statement. So what says net sales we have to take. And in balance sheet, from the total assets. From the total assets is the common, or total liabilities is the common. Okay. So from total liabilities, each and every liability, what is the percentage? Share capital divided by total liabilities. Creditors divided by total liabilities. Reserves and surplus divided by total liabilities, like that. Suppose the assets are there, each and every asset, we will calculate the percentages in total assets. So, land and buildings in total assets, plant and machinery in total assets. Okay, and that means whatever the assets are there, cash on hand, cash at bank, debtors, and everything divided by total assets into 100, we will get the percentage. So that is common size. How is it? We will see now. So first we will do the common size income statement, then after common size balance sheet. Okay? Here, prepare the common size income statement from the following. Example 7. Prepare common size income statement from the following. Sales 1000 and 1500, and after that cost of goods sold 600, 750. Administrative expenses 225. Selling expenses 100, 175. Net profit 150 and 350. So this is the information. So in preparation of this statement, you see here. Two thousand 2016. Okay. Amount in percentage. Particulars. Common sense. Income statement. Sales 1000, 1500. Okay, so this is 100% minus cost of goods sold 600, 750. 600 divided by 1000. Okay. See, 600 divided by 1000, 60%. 750 divided by 1500 is equal to 70, 50%. So into 100. So this is gross profit. Already know. So each and every one in sales only, in income statement. The ప్రతిదీ కూడా మనం సేల్స్ లో పర్సెంటేజ్ చూస్తాం. సో కాస్ట్ ఆఫ్ గూడ్స్ సోల్డ్ డివైడ్ బై 1000, దట్ మీన్స్ సేల్స్ ఇంటూ 100, 60%. 400 divided by 1000, 40%. Here 750 divided by 1500. Okay, that is 50%. 750 divided by 1500, 50%. Next, minus operating expenses. Minus operating expenses. Administrative expenses here. 150, that is 15%, and 225, 15%. Selling expenses. Selling expenses here. So the total operating expenses here. Net profit or profit before tax, that is A minus B, 150, 15%, and 350, 23.2 percentage. So you observe it here, this is very common. Then how to prepare the common size income statement means first you remember the procedure of the income statement. You have to remember the procedure of the income statement. Then how to start that income statement. So from sales minus cost of goods sold, we will get the gross profit. Then after operating expenses, under operating the administrative selling expenses are there. Okay, and minus, then immediately we will get the profit before tax, after tax, profit after tax, that is net profit. Here tax is not there, but the percentage calculation, here the comparison no need, from previous to current year is no need. In common sense, what here? Common is sales. Each and every item, what is the percentage in sales? So that's why 600 divided by 1000, 400 divided by 1000, 150 divided by 1000, 100 divided by 1000, 250 divided by 1000, 150 divided by 1000. So that individual percentage here. So in common, what we are taking the common figure, that is always 100%. Okay, so that's why the sales is 100%. Here also same like, then 100% is sales, then 750 divided by 1500, and 750 divided by 1500, 225 divided by 1500, and 175 divided by 1500, then 400 divided by 1500, then 350 divided by 1500. So it is very, very important. This is income statement. Then what is the comments? You see, what is the comments means? Here the sales cost of goods sold percentage in first year 60% is there, and second year 50%. So cost of goods sold decrease from first year to second year, and sales also increased. Then the percentage gross profit previous year 40% and current year 50%. So that is increases. So compared to the 2015 and 2016, the cost of goods sold has decreased, and is 50% of sales against 60% of 2015. So indirectly, cost of goods sold will decrease, then automatically our gross profit will increase. And due to the decrease in cost of goods sold, the gross profit has increased from earlier 40% to 50%. And among the operating expenses, selling has increased from 10% to then 11%. But the administrative expenses is common, there is no changes. Only the selling expenses are increases because due to the sales also increases. So finally, the operating expenses are 1% increases. Then after the net profit 15% to 23%. But the overall The increases has been offset up by the increases gross profit, thereby ultimately increasing the net profit from the earlier 15% to 23.33. Then in overall, the company has satisfied. So that's why the overall financial position of the company, how they satisfied means everything is the profits are increases. That's why increased what profits are increases in the company. Then company has satisfied. And same way, another one more problem that you have to see. Sales 3,50,000, 4,50,000. Cost of goods sold 2,75,000, 4 lakhs. Operating expenses 11,000, 22,500. Office expenses 4,500, 15,000. Selling expenses 2,500, 3,000. Distribution expenses 1,250, 1,000. Financial expenses 10,000, 12,500. Tax rate is 35%. So this is the example problem. Here also asking the prepare the common size income statement from the following. 2013, 2014 year given. So 2013 and 2014. What sales are there here? 3,50,000. Okay. Here 4,50,000. Then cost of goods sold 2,75,000 and 4 lakhs. 78.57. Then 88.2. 89%. 75,000. 50,000. 21.43% and 11.1. And office distribution selling, that is operating expenses. So office expenses 45,000, 15,000, selling expenses 2,500, 3,000, and distribution expenses 1,250 and 1,000. So these 45,000 divided by 3,50,000. Then what is the percentage? Okay, 1.2. That is here. Separate operating expense also there. $11,000 and 22. Fine. 3.2 1.29 percentage. This is so 59,750. Zero 1 percentage. Office expenses only 4,500. So this is mistake. So total is 19,250. So 90,250 divided by 3,15,000 into 100 500. And 41,500 divided by 4,50,000 9.22. This is total operating expenses. So net operating profit A minus B 55,750 and 8,000. Minus financial expenses. So the financial expenses here is 10,000, 12,500. So 45,500, 750. Here minus 4. So this is profit before tax. Minus tax. So that is 35%. 35% on the 45,750. That is 16,012 rupees. So 4.58. So your net loss is there, that's why no need of the tax. $29,737. So that is 8.5%. So this is net profit after tax. So simply you have to understand. Same the income statement already we have prepared in previous. So in common sales statement, the common figure is sales. Each and every item you have to calculate the percentages in sales only. Sales is 100%. So from 100%, the cost of goods sold 78% is there in previous year and 88.89% in current year. Then gross profit 21.43 percentage and 11.11 percentage, and operating expenses, office expenses, selling and distribution expenses individually that we have seen. And the total operating expenses are 19,250, that is 5.5, and 8,500 rupees net profit is there, 1.89 percentage. So finally, from previous to current year, the sales increases, but automatically the other expenses are increased, that's why totally loss. That is the minus figure. So if it is minus figure, then we have not satisfied. So the overall position is from previous to current year, it is bad. So necessary measures have to take in the by the company to reduce the cost of the goods sold and other operating and non-operating expenses. So where the means 78% or 88%. So 10% increase the cost of goods sold and other expenses also increases. Then here the 5.5 is there, here the 9.22 is there. So that increases. So that's why you have to calculate another. Then finally it is what advising to the company, then take the necessary steps, take the necessary measures, so to reduce the cost of goods sold and other operating expenses. So thank you very much. Have a nice day.